Good morning, everyone. Hey, Mohammed. Hey, Shanghai. What's up, Raj? Hey, Cisco Aloha. Resto, what's going on? Hey, Raj. Sorry about yesterday, Jiraj. Day got away from me. We'll do a one-on-one today. Hey, Travis. Good observations, Travis. Right? You were saying that the selling is fairly orderly, and that's a good observation. And the reason why we have orderly selling is because we've got a lot of bids. Right? Remember, we still have all of those short positions underneath us, right? Hey, Moran, you know, if you got rid of these drawings and you go look at a longer term chart, we have, there's a gap here, there's a gap here, there's a gap here, and, there are gaps that are unfilled in this market. 1, 2, 3, 4, right? Hey, Luke, what's going on? So, let's see what we've got tonight. Right. We finally, I was going on and on about that 64.51. So we took out 64.51 and all the inventory above it came tumbling out, right? It's our, you could almost treat it like a swing low, right? Even though it's really technically not, but that's where all the inventory is above. Now it's all kind of dumping out. We've got a strange looking profile tonight. It's almost a B shape, but not quite. It kind of is. You can see accumulation between 64.08 and 3/4 and 18 and 3/4. Our low tonight is 64.09, so my levels are off by about a tick. And what I'm looking for is this level right here. You see the bottom of these value areas. They're almost exactly the same level. So I think on further liquidation, we'd be looking for that 64.02 area. And the cost basis underneath us is here. This big chunk of volume right here. So let's see what happens. Right now, the market's kind of found a bottom for the interim. Hey, Tim, how you doing? So let's go take a look at our more detailed we have a poor low, right? We have a poor low in the overnight, right? It was a nice little opportunity. I was not awake enough to catch that trade. That would have been a nice little long. And if you were a larger term trader, like sort of holding for longer, you'd be going long sort of 10 and 11 against that poor low. That poor low means there's competitive buying. So that's a place that you would go long and then you'd sell into the strength up. Hey Dan, how you doing? Right, so we had some liquidation yesterday. That was good. We needed it. It was healthy. So my Balance is 9 1/4 to 13 3/4, and we are we've taken that cheap product between 9 and 13. We're retailing it out at 16, and the sellers are in there at 16 and a half. A little bit of distribution here on a smaller time frame, right? Target, if you were going long, right? VWAP's around 20 and change, but before VWAP is yesterday's low. That is an obvious place where sellers will be lurking. So if you're long in this area and you're holding, expect some selling competition at yesterday's low. Okay? I haven't even got my trading account open here. Let's go open it up. How's everybody doing this morning? Today we have Fed minutes, don't we? At 2 p.m.? Pretty sure we do. Yeah, minutes of Federal Reserve's July FOMC meeting at 2. And tomorrow we have jobless claims, and Friday is their Jackson Hole nonsense. Hey Dave, how you doing? So let's see. If you are long, and we're coming up to that low of yesterday, we'll see. Let's see where the sellers step in. Now, overnight inventory is short. That's why we're having this move back up off of the 8s and 9s. And as we creep up to yesterday's low, I'm looking for a seller somewhere here. Let's see. Now, the question is, do we liquidate for more than one day? Hey, AO, how you doing? Do we liquidate for more than one day? Because usually we liquidate for one day and then we're right back up. Right? That one day liquidation is kind of almost like that steam control valve on a pressure cooker, right? It lets some steam out of the market and then right back to trend. Hey, AZS, how you doing? It is a sticky market, you know. You've got an uptrending market with limited supply, right? So markets like stocks just don't naturally occur, right? They're created, they're built, they're structured. This market is structured for asset appreciation, right? Low interest rates, huge money managers, long-term holds, I mean, who buys 1 billion shares of Apple, right? And it's paid for in cash. So they're not subject to margin call. That's why BlackRock doesn't liquidate positions when markets sell off. There's the previous day low, so we hit it to the tick. No front running. Interesting. Now let's see if we accept in yesterday's range. Right? That will tell us. If we grab all of this cheap inventory from 9 to 19 and we accept in yesterday's range and stay in yesterday's range, be very careful on the short side. Because if enough people short this market, do I need to remind you of the last time this happened? Right? The last time this happened, we had a massive gap down, right? And we filled that gap the very next day. So be aware, okay? Be aware of that, right? These markets are not forgiving to short sellers, right? Everyone wants to be a short seller because that's what the cool kids are doing, right? But it's no fun being a short seller when there's no supply. And if they grab all the cheap supply at night, there might not be enough supply in the daytime. And enough people, here's the thing that you have to remember. And this isn't me talking out of my nose. I'm telling you as someone who gets paid an insane amount of money to create short positions and trap shorts and deals and manufacture and strategize short positions. If you get enough people short under a certain level and then you yank the supply, you will have a move up just like the last time. Just like that last time. We dipped down all the way to 62.40, right? We slammed it all the way back down to 62.40, and then from 62.40 we created a move and put in new highs up at 6,500, right? So if you trap enough people short under a level, it will create the support that you need, because support is nothing more than unfilled bids. So now if you are a short seller and say you want to take a hit and run short, right? Say you wanted to take a hit and run short. And you were shorting yesterday's low. So you're short 17 and a half, 18, right? Your stop is just going to be just up at 19. Right? So if you're shorting this area here, right? Structurally, I mean, it's in the middle of the range, so it's hard to recommend that for newer traders, but a, sort of a simple market profile trade is to short here and just put your stop up here, right? Because you expect there to be selling. Now, where are you going to cover, right? Say you are short here, where would you cover? Well, I'd put a lookout bid here at 17 to see if you can buy one back at 17. Right? Now, what's a lookout bid? A lookout bid is when you're short, you put a buy order there and see if you get hit. If you don't get hit, what does that tell you? Right? Say you're short 18 quarter, 18. Right? You put a buy order at 17 for one of your contracts, and you can't get filled at 17. Right? This is how you monitor for continuation. Right? The best indicator is to actually stick your fingers in the order flow and see whether or not you can get filled. Because if you can't get filled, there's no supply. Right? So you're short 18, you put a buy order at 17 or 16 and 3/4, right? And that buy order fails to execute. That's what filled means, right? If you can't get your order filled, it means there's no supply. If there's no supply, what do you do? Is this microphone on? Hello? Am I on mute? Just checking. Testing, testing. Can you guys hear me? Oh, you're just ignoring me. Okay. All right. All right, just checking. I know what to do. Right? This is why I'm asking you guys. I know what to do. Thanks, Travis. Right? You bid it up. All right. That's how you tell, right? If you're gonna make billions there, AO, you might as well learn how to trade. You're gonna have to learn how to trade before you make billions, right? If you don't know when to cover a short, if you don't know when to cover a short, it kind of might help. It might help if you're making billions. Oh man, I needed that laugh. All right, so bought one back at 17, right? Put another bid down at 16 and a half and see if you can get a fill, right? You're short 18, 18 half, wherever you're short. Put your buy orders in, right? Okay, got filled at 16 half. Put another buy order in at 16 half. And then let's see, I'll kind of go 15 and 3/4 on the next buy and see if I get filled. This is the first trade I'm taking, so I'm not swinging for the fences, base hits, right? So I'm 16 half bid. Guess what? I'm not getting filled at 16 half, right? So I'll go 16 and 3/4, filled at 16 3/4. My last contract, I'm going to try and cover at 15 and 3/4. I'm just going to move that up to 16 and see if I can get tapped at 16. That last contract has an 18/4 sell cost average on it. This quarter, come on, fill me at 16. All right, it's printing 16s. No fill. Printing 16/4. Right. I'll just take it back at a quarter. Flat. There we go. Don't know yet, Dan. London's going to open soon, right? London's going to open soon. And under normal market conditions, we should get a move back down, take out the 16s, come down to this 13 and 3/4, 14 area, right? This is going to tell me on this move up, where did everyone get into trouble on the short side? Because when the market comes down and hits a certain area, it's going to find a bid and then rotate back up. If it doesn't, then I know that there's not a big short position down here. So that trade, I made 5 points on that trade. That's not a big deal on a couple of contracts, but it's the market intelligence, right? Right? It tells me where the bid is, right? Old traders, what they do is they look for the bid, right? Why do you look for the bid? The bid is where the shorts are trapped. The bid is unfilled buy orders, right? The first people to come in and bid a market are short sellers trying to cover. So, knowing that, right, we look for the bid. If you were shorting, right, we look for where the market's going to come down to, and those buy orders start to execute or fail to execute. So if you're shorting, you short down to the bid, right, and then cover, right? See, in the old days, to go long, what you'd do is you'd short the market, and where the market would stop going down, you'd turn around, cover your short, and go long off of that area. Especially when markets were slower, prior to all the electronic trading, right? It would take time because orders had to go in verbally, right? See how it's turning at 16? Where there were sellers before, there might likely be bids, right? Because the position is underneath that. So after a distribution cycle, the market will go on sale down to the top of a cost basis. That's why in trading, even though people don't talk about inventory and cost basis, that's everything in trading, right? Otherwise, it's all just nonsense, right? Trading, look up trading. Trading is moving inventory, right? So either you're trading spices or you're trading carpets, you're trading some sort of a product, right? You're buying it at a cheap price, selling it at a higher price, right? Could be apples or oranges or bananas. Here it's ES contracts, right? So if you don't know where the inventory is priced, how can you speculate or do business in a market if you don't know where the inventory is priced? But you're relying on some indicator or, all of these other things. Why don't you rely on what really matters, right? That's why I covered the short. I was short, just 18 and change, and that's why I had my bids in. Now, if I hadn't covered that short on the way down, we're back to where I shorted it. And then you hit I moved my price to break even and got stopped out. What's the point of doing business for break even? Right? I don't understand why people move their stop to break even. At least pay for your commissions. Otherwise, you're just doing business to pay commissions. Does that make sense? Right? There's no reason to have your stop at break even. If you have your stop at break even, it means that you have your trade in the wrong location, or you're not sure about your trade location. So you need to do work on that, right? There is no reason to have a stop at break even. That just doesn't make sense in business, right? I'm going to go sell French fries for break even. What's the point, right? You got to cover your business expenses, right? A little common sense never hurt, right? And when you put a trade on, if you're short, put some buy orders in to see if there's any supply. right? Don't just assume that the market's going to go where you think it's going to go, right? Let the market tell you. Because if I couldn't buy anything at 16, remember I couldn't get filled at 16? Even though it went to 15 and 3/4, I couldn't get a fill at 16. So I went and bought it at 16 and a quarter. Don't be a dick for a tick, right? Because now it's 18 half, right? So there you just saw a practical application of what we teach at the Trading Syndicate, right? We teach you how to use practical common sense when you're trading instead of indicators and all this nonsense like delta and schmelta and all this nonsense, right? You use simple common sense in business with good business habits, right? What's a good business habit? Get paid, right? We want you to get paid, right? No double talk. You're short, you put some buy orders in. You're long, you put some sell orders in. If those sell orders don't execute, then you know somebody is undercutting your price, right? So you get out, take the money, right? If you're walking down the street and there's $100 bill lying there, do you pick it up or do you say, there's $200 around the corner and just leave it? Right? There you go, Louis. Right? You know, just have some common sense when you're doing this. Right? You'll actually be able to pay your bills. Hey, Jerry, what's up? Your nickname is Mr. Vacation. How you doing? Guy took a 3-week vacation. I was so jealous. Now you're back at it. How you doing, my friend? Now let's see if those sellers are still at 19 and a quarter, 19 and a half. Oh, it was 6 weeks. Sorry, not only 3 weeks in Spain. That's right. 6-week vacation. The only time I ever had 6 weeks off is when I had open heart surgery. Uh, I had to actually die and come back to life to get 6 weeks off. Oh, what a business. Oh gosh, look how slow it is now. Okay, come on, London. All's good in the UK. It's actually a little cooler than it was last week. All right, London's opening. Let's see what we do. Oh, poking our head into yesterday's range. Let's see if we can go tickle VWAP. Here are the upper stops. Now there is a little bit of supply trapped up above 22, right? So if you are long, remember that there should be sellers here, here, and here. It'd be nice if we had more than one day of selling. Next week is month end. Month end is Thursday. Jeez. Can't believe August almost gone. Unbelievable. It's like I blinked and August went by. It's crazy. Inventory is still short, my friend, because yesterday's close is all the way up at 64.35 quarter, right? So it is still short inventory, right? So what we are doing right now, right, to use a fancy word, is we are negotiating yesterday's low, right? So the market's going back and forth because large traders will have sell and buy orders there, and it's also close to VWAP. So I took the short the first time. This time, I think I'll just, if you are short, right? Now, if you are short, use the top of the London Open. Use 20 as a stop, right? Because if it takes out 20, it most likely will kind of go up to that 22 level. Now, if you're a larger trader, remember this is a counter trend trade. So you don't want to spend too much money on business expenses, right? Exactly. No anticipation, we react, right? We'll leave the anticipation for the fortune tellers, right? Yeah, we finally sold, right? Hey, what's up, Johnny? How you doing? How's the new country treating you? Oh, you're back in Guam, just packing up. Right. So if you are short, say 19, stop 20. I'm still looking for a little lower, trying to find the bid. Always trying to find the bid. Let's get some liquidation going. Get some better price action. Come on. Jeez, it's stuck. There's a heck of a bid there at 17 half, so 18, isn't there? Yeah, it is a quiet London Open, isn't it? And so now, if you are a new trader, right, and you're really kind of unsure of what's going on, don't worry about it. Let the large traders work this area out. It's much easier for you to just let it work out and then take the trade. This way you don't have to try and predict what's going to happen. It just makes your life a little easier. That's why I always like to let the larger traders come in and sort out these areas. Let them spend the money. You don't like easy? Well, I do. I will let my inner laziness dictate these trades, trade breaker. I like easy. I like uncomplicated. You know? Sometimes in retail trading it really pays to be lazy at certain times. So we tagged VWAP. Yeah, we're slowly creeping up. Market doesn't really want to move lower. There's bids down there, right? So the sellers are like, "Hey, man, if they want to pay more, let's let them pay more." You know? Oh, the hardest part about this kind of price action is staying awake. You know? Yeah. Anybody have any questions or want to talk about anything while we're waiting for this thing to? Basically, we're waiting for the bread to be baked. No? Okay. Exactly. That's what the treadmill is for, right? You're right. So, Jiraj, I know you're obsessed with this, so I will. Right? When price returns to that area, what is that, Jiraj? It's a cost basis, right? It's the top of a cost basis. So when you're short, it's a place where you put a bid to see whether or not you don't go long off of that area, right? So context is you're short. When price returns to the top of a cost basis, now pretend that you're working with pops and you're selling your stuff and you put it on sale. When you come close to your cost basis, what you paid for it, you're just going to simply stop selling, right? That's all it is. It's not overcomplicated. Maybe. Hey, that's a good idea. The GME situation. Oh, that's a beautiful subject. What's going on now with GME? What's that stock is like a soap opera. What's going on with GME now, Luke? Are you talking back in time or currently? Back in time, it was an engineered short squeeze, right? Back then, it was all a setup, man. See, what happens is back when this thing ran, some hedge fund like that, those idiots at Melvin, they were short, right? They were short against the financing. The company canceled the financing, but before that, a certain someone who will remain nameless bought a whole bunch of stock down here. When they canceled the financing, then they paid those idiots on Reddit to tout it, and it just ripped, and they sold into it. That thing was trading $12 billion worth of stock every day. So there was someone whose name cannot be mentioned who probably made billions off of that deal. Everything was engineered. It's one of the most beautifully engineered short squeezes in history. Credit where credit is due, right? It was it was a work of art. Oh, the kitty guy is just an idiot who was paid to do a job. He's not the guy who made the billions. The guy who made the billions owns a baseball team. There you go. It was beautifully done, right? And everybody got sucked into it. No, not the CEO, Dan. That would be too obvious. Remember, on Wall Street, nothing is what it seems, and you guys will never ever know the truth. But that was orchestrated, every bit of it. You don't make that kind of money randomly. Hey, John, how you doing? Yeah, that was a beautiful short squeeze. Short squeezes don't happen naturally. Yeah, you're gonna have to do a little bit of reading, Dan. See if you can put two and two together and get 25. Hey, we went through the singles, right? That's why that second time I didn't short it, because I was like, I better not kick that can twice, right? So remember, folks, if we stay inside yesterday's range, be careful on the short side. Hit and run shorts are fine, right? There's nothing wrong with hit and run shorting. But be careful position short if we cannot get out of yesterday's range. Be very, very careful. Okay? Little inventory correction. I think we might come back out. I'm not sure if we're done with the liquidation. We had 4 days. No, 5. We had 5 trading sessions above 64.51. That's pretty much it for me this morning, folks. Yeah, that's how you orchestrate a short squeeze. You buy up all the cheap paper and then you create the short squeeze. That's in equities. Now, short squeezes happen in futures markets because people all think and trade the same way. But yeah, it's kind of fascinating stuff. Yeah, I'm going to let you guys go a little early. I do trade micros, Cisco. Cisco, here. Where is it here? You should read this document, my friend. Where is it? If you go in to, I'll post it in the room, Cisco. There's my 5-step thing. I don't know if you've seen it, but I always start the day trading micros, right? So I'll trade micros. So I do the 5 steps. I look at where the inventory is. I do my balance zones. Then I test my balance zones with micros to see if they work. If they work, great, right? Then I switch to the mini. If they don't work, I reassess. What are we looking for? We're waiting for the market to tell us, Mohammed. Right now, I'm looking to see whether we stay inside yesterday's range or do we come back out of it. So just use the levels that I have here to tell you, right? This is that inventory from the overnight. We're going to take it and try and sell it up here, right? So inventory under VWAP, go sell it above VWAP for fun and profit. Okay? And I'll let you guys go a little early. It's a bit slow. Look for reaction at 22. And we will see you at 9 o'clock. That's when my next session is, 9 o'clock Eastern Time. Thanks for joining us. Please come visit us at thetradingsyndicate.org. Love to show you how this business works in a practical manner so you can actually make money instead of, you know, getting jerked around. Thank you, everyone. Appreciate you guys. Yeah, we'll see you in a few hours. Thanks, everyone. Bye for now. Trade safe out there, okay?